The US presidential election is less than 1 month away, and right now, bookies seem to think it's too tight to call. Global markets have surged to record highs this year, and the US dollar has done pretty well. So what impact could the election have on our currency and other currency markets? Well, joining me now is Steven Dooley, the head of market insights at Convera. Steve, thanks for your time. Just explain to us how big an event the US election is from a markets and currency point of view.
Thanks, Ed. Certainly one of the biggest events of the year in terms of geopolitics. And it's been a year in which political elections have played a really important part. At the start of the year, we saw the Taiwanese election. We saw the Taiwanese dollar fall about 5% after China expressed some unhappiness with the electoral result over there. In June, we had the European parliamentary elections, a better than expected result for the right-wing anti-Brussels party, and we saw the euro fall more than 3%. So far this year, we have seen a lot of moves driven by elections, and this is no doubt the biggest event of the year. The US equity market is more than 50% of the global equity market. The US is the world's largest economy, so the election result, with its impact on domestic policy, trade policy and international relations, can have a really significant impact on financial markets.
Yeah, voting day on the 5th of November coming up pretty soon. What do you see as some of the big risks for markets heading into this election?
Well, you mentioned one of the risks in the introduction, that equity markets have been so strong this year. Traditionally, what we see is that equity markets start to lose ground towards the end of the electoral campaign. But this year, particularly thanks to those expectations of rate cuts from the Federal Reserve, the US equity market at all-time highs again overnight, and the US dollar has been remarkably strong as well. So the first risk is that equity markets are quite highly valued, and that brings the risk of a potential sell-off if we get an unexpected result, if we get some kind of contested result. Second of all, what we've seen historically is that changes in presidents can have a really big impact on the US dollar. The last three Democratic presidents have seen a strong gain in the US dollar. The last three Republican presidents have seen the US dollar weaker. So a change in president, which we'll get regardless, it'll either be Kamala Harris as a new president or Donald Trump as a returning president, that can see a regime change in the US dollar. And lastly, the most interesting factor that we've seen is that the short-term influence, short-term reaction doesn't seem to stick. If we go back to 2016, the US dollar was initially higher after the win of Donald Trump, but within a few months, the US dollar had started drifting lower in line with what we normally see with Republican presidents. In 2020, after Joe Biden won the election, we saw the US dollar initially weaker, but the US dollar ended up really strong, the third best performing election cycle for the US dollar during Joe Biden's campaign, Joe Biden's electoral term, partly because of the big spending program that he introduced. And so after the US dollar was initially weaker, the US dollar actually ended stronger. So that third risk really is the fact that the initial reaction doesn't tend to stick, and that means volatility in markets, and particularly in currency markets.
Yeah, OK, so let's say Donald Trump does win this upcoming election. What might that then mean for the Aussie dollar here back in Australia?
Yeah, well, what's been really interesting is that after Joe Biden dropped out of the election, we saw the US dollar weaken in line with the falling chance of a Donald Trump win. Of course, there are a couple of other factors going on at the time, those Fed rate cuts, but that was certainly some part of that. Since October, as you say, the betting markets have tightened considerably, and since then the US dollar has pushed up around about 3% since the start of October. So clearly, as markets believe that a Trump presidency is more likely, the US dollar is starting to gain as well. For the Aussie dollar, if we go back to 2016, it was trading around 76 cents before the US election. after the election, after Trump's win, the Aussie dollar fell back to around 72.50. So a fall of around about 5%. If we extrapolate that into current prices, we see that a Trump win could see the Australian dollar heading back towards 64. A Harris win could see the Aussie dollar moving up towards 70. And a lot of that comes down to trade policy, to tariffs. That's seen as a negative for countries that are closely exposed to trade, the Canadian dollar, the Chinese yuan, and of course the Australian dollar as well.
And look, just at the same time as the election, there's also the US Federal Reserve. They could cut rates again. Would that give the Aussie dollar a boost?
Yes, certainly. We saw the Australian dollar move up to 18-month highs after the last Federal Reserve cut that we saw on the 19th of September in Australia. So historically, a cut in interest rates from the US does see the US dollar lower. And so that could certainly drive the Aussie dollar higher as well. It's going to be a massive week, of course, because on the Tuesday, we have the RBA. On the Wednesday in Australia, we'll be getting those US presidential results. And then on the Thursday, we have the US Federal Reserve. So it's going to be a massive week in FX.
Thanks, Steve.